In this video, we're going to do a comprehensive overview of the various futures products that you can trade using Apex Trader Funding, Top Step Trader Funding, MyFundedFutures, Earn to Trade, TradeDay, or if you are trading your own futures brokerage, TradeStation, whatever. What we are going to do is we're going to go through the various futures products and talk about the contract specifications, the minimum fluctuation size, in other words, the tick size, and what are some of the things that drive that particular futures instrument. So I'm going to go through the right side of my screen here. As you can see, I have it labeled Apex Trader Funding list, and I'm going to go through this in a methodical way. So guys, this video is going to take some time. If you want to skip ahead to the futures products that you are concerned with, basically I'm going to start with the currency futures here, and I'm going to go down the list as you see it on the right. So I'm going to start with the currency futures. Those are basically your FX pairs: Australian dollar, British pound, Canadian dollar, Euro futures, yen. These are going to be the contracts that I start with. I'm then going to move to crude oil. Then I'm going to talk about some of our energies. I'm going to talk about crude oil, going to talk about natural gas. We're also going to talk about the stock indices, so the ES, the NASDAQ, the Russell 2000, and the Dow Jones. We're also going to talk about our T-bond futures, our metals, and our ag products, as well as Bitcoin. So guys, the basic overview is for you to be able to listen to this video, to maybe watch it once or twice, and to get a better understanding of the products that you are trading. Guys, this is R Trades back here with another video. This one's going to be a little bit of a long and tedious one. I understand if you want to skip ahead to the part of the video where I'm talking about the product in which you are interested in trading. With that being said, guys, if you like this content, if you are interested in futures trading, and you want to support me in a big way, please make sure to like, comment, subscribe, and use the affiliate links in the description box below, guys. Okay, guys, so without further ado, we're going to head into the Australian dollar. And as you can see on the left-hand side of the screen, what I have pulled up here on a web browser is I have the Australian dollar futures contract set out. So guys, whenever you go into futures trading, whether you're trading your own cash or you're trading a prop trading, it's really important that you know and you're familiar with the product and the size that you're actually trading, because they're not all the same. So going on to the CME Group website is something that is worth investing time and effort into. Okay, guys, so with that being said, the first product we're going to look at here is the Australian dollar. And so every time that you come here to the right side of the screen and you're looking at trading the Australian dollar, you're trading 100,000 Australian dollars per nominal unit. And then what you really need to know is on CME Globex. So you can see 0.00005. That is 4 zeros and a 5 per Australian dollar increment is $5, guys. So that is the minimum contract fluctuation. So as you can see here, if I head over to the Australian dollar futures, lo and behold, notice that the minimum fluctuation there is 4 zeros and a 5. Okay, so I don't exactly know what number that is, but it's like 1/10,000 or 1/100,000th. And every time that it fluctuates, it's a $5 change. Okay, so let's say that I were to put on one contract, I'm notionally trading 100,000 Australian dollars versus the dollar, and every time that it moves in my direction, it's $5 per tick. Okay, now the next thing I want to talk about going through this comprehensive overview is I want to talk about some of the market behaviors of the products that you are looking at. So I think it's important to do that. And so with the Australian dollar, if I can say this correctly, something that you should know on the overview tab of the CME Group here is Australia's resource-driven economy is heavily dependent on global growth and commodity prices. CME-listed FX futures offer more precise risk management of AUD-USD exposure through firm pricing, convenient monthly and quarterly futures, and weekly, monthly, and quarterly options, and flexibility to trade via a central limit order book, direct with blocks, or EFRPs. So some of the things that drive the Australian dollar is, of course, Australian central bank interest rates, commodities such as copper, gold, and silver, and then obviously the US dollar. So this is the Australian dollar versus the US dollar. Australia is particularly driven by commodity prices. It is a commodity-based currency, so The Australian dollar is going to be influenced by copper prices, oil prices, gold prices, silver prices, that sort of thing. It's also going to be based on the Royal Bank of Australia's interest rate, so the RBA's interest rate decisions, as well as the Federal Reserve's interest rate decision. That's going to be a common theme that we see throughout these FX futures. So what you need to know when you are trading the Australian dollar futures is that it is $5 a tick. Okay, it's $5 a tick, and you're notionally trading 100,000 Australian dollars. The Australian economy is primarily driven by commodities, and the Australian dollar futures are going to be driven, number one, by the Federal Reserve of the United States, our interest rate decisions, as well as the Royal Bank or the RBA's interest rate decisions. Those are going to be the things that are driving the Australian dollar. Okay, guys. Now we're going to move on to the British pound as we move through the futures products. So I'm here on the CME Group website. Okay, guys, so on the right side of your screen, you'll notice that it is ticker symbol 6B1 exclamation point. And what that is that's TradingView's continuous contract. However, these are, if we go here to the listed contract, you see they're quarterly contracts. So the latest contract, if I go here, is not the continuous contract, guys. It's the July 2024 contract. You can see that there are a number of contracts throughout the year. Okay, so the British pound futures here, the contract unit is 62,500 British pounds. So every time that you trade one unit of these 6B, in other words, British pound futures, you're notionally trading 62,500 British pounds. A price quotation is US dollars and cents per British pound increment. The minimum price on the CME Globex is 3 zeros and a 1. So 0.0001, and that is per GBP. And so if we go here to the TradingView tab, let's bring this up here. If I click on Tradeovate, if I click on Trade, notice that instead of on the Australian dollar, you'll notice that it's that 0.0005 increment. But if I go to the pound increment, it fluctuates in one, not tenths, but 1/10,000ths. So 1/10,000ths. In other words, it's 0.001 increments rather than 0.0005 increments. And that's something that as a trader you should know, frankly. Okay, so I'm going to get this back on the correct path. So going back to our British pound futures here on the left side of the screen, the increment is $6.25 per tick, and the increment is smaller. So basically what you need to know is that when you're trading the British pound futures as opposed to the Australian dollar futures, it's a 0.001 increment, and the increment is $6.25 instead of $5. So it's a slightly larger contract. Now, if we head to the overview of the British pound futures, let's have a look at what the CME Group has to say about it. One of the most actively traded currencies in the world, the British pound and US dollar are underwritten by more than $250 billion in trade annually. Okay, guys, so again, what are you looking for when you're trading the British pound futures? As with all of your currencies that are paired against the United States dollar, you're looking for U.S. Fed interest decision rates. But you're also looking for Bank of England headlines. So you go over to Financial Juice and you're looking for Bank of England headlines. When you're trading the Australian dollar, you were looking for RBA headlines. When you're trading the British pound, you're looking for Bank of England headlines. Okay, guys, let's now move over to the Canadian dollar and look at that contract. So we're going to look at 6C, and that is Canadian dollar futures. And let's get over to it on TradingView as well. Okay, guys, so now we're looking at 6C, which are the Canadian dollar futures. So if we look at our contract unit, we see it's 100,000 Canadian dollars. So the British pounds were 62,500 British pounds, and the Australian dollars were 100,000 Aussie dollars. Now that we're on the Canadian dollar, it's 100,000 Canadian dollars. Price quotation is US dollars and cents per CAD increment. Minimum price fluctuation is 0.0005 per CAD increment. That's $5 per point. And then we can see here the spread is $2. So this is going to be similar to the Australian dollar, where it's 0.0005 or 1/10,000th. So again, slightly different than the British pound. It's more similar to the Australian dollar product. Okay, product code, we know that. That's 6C on CME Globex. Listed contracts are quarterly contracts listed for 20 consecutive quarters, and serial contracts listed for 3 months. So again, if we were to go onto TradingView here, we can see that we have a July contract, an August contract, a September contract, October contract, November contract, and December contract. So that is what you should be aware of there on the Canadian dollar, guys. The big point about the Canadian dollar is that it's going to be that same $5 per point instead of $6.25. So it's a slightly smaller contract. So when you're trading the Canadian dollar, you should know that it's a slightly smaller contract than the British pound contract. And with that being said, what drives Canada's economy? Lumber prices. It's another commodity-driven economy. So you're looking for that. You're looking for headlines from the Bank of Canada. And then in addition to that, guys, as with any Forex pair, you're looking for Bank of Canada decisions. You're looking for Federal Reserve interest rate decisions. And then you might also, if you come to the Forex tab here, and if you make a list, you can do this as well. If I head over to USD CAD, remember this is going to be the spot Forex rather than the futures contracts. So you might also want to come and look at this, but for this video, I'm just keeping to the futures. Okay, guys, now let's have a look at the Euro futures. This is 6E. Okay, guys, Euro FX futures contract unit 125,000 euro. Guys, every one of these contracts are going to be similar, but you should know what you're trading. Okay, so 125,000 euro on the 6E. Price quotation is US dollars and cents per euro increment. So again, how you quote this, the quote currency is $1.87, $1.08 with 75-cent increment. What would you say is $1.08 per euro? So that's how you quote that. The second currency is what's called the quotation currency. So it's $1.08 per euro, if that makes sense. $1.08 per euro. Okay, guys. So on the left side of the screen, again, the trading hours are going to be all going to be the same. Minimum price fluctuation is 0.00005 per euro increment. Is $6.25. That's what you need to know. So that's going to be similar to the British pound, slightly bigger contract than the Aussie dollar, and the Canadian dollar is what really you should know. Now let's head over to the overview tab. Okay, the most actively traded currencies in the world, the euro and the US dollar, are underwritten by more than $1 trillion in goods and services trade annually. So guys, when you are trading the Euro futures, what sort of fundamentals are you looking for? You're looking for Federal Reserve speak. You're looking for anything that are going to affect US dollar interest rates. So you're looking for the Fed funds rate. You're looking for headlines on the US economy. And then you're also looking for the European or the ECB decisions. You're looking for things that come out of Germany especially, but sometimes out of France as well. You're looking for headlines out of Germany, France, a little bit of the other Eurozone. You're especially looking for European Central Bank interest rate decisions and European Central Bank headlines. So those are the things that you're looking for when you are trading the US dollar versus the euro using the futures. Okay, guys, now let's move on to the 6J, which is the Japanese yen, and this is a really fun one. Okay, guys, overview here from the CME Group website. More than $250 billion of goods and services are exchanged between the U.S. and Japan each year, providing a natural and liquid market for Japanese yen futures. Okay, guys, let's take a look at our specifications here. Price quotation U.S. dollars and cent per JPY increment. Contract unit is 12,500,000 yen. It's a lot. It's 12,500,000 yen. Okay, guys, now the yen, what you should know is that it's quoted quite a bit differently with a lot more zeros. Okay, so on the CME Globex, you can see it's 0.0000005 per JPY increment equals $6.25. So the yen futures are going to be basically like the pound future, so $6.25. So just to briefly recap, our minimum tick size for the Australian dollar, $5. Minimum tick size for the Canadian dollar, $5. I believe that, I forgot what the euro was, the yen is $6.25. All right, now let's take a look at our New Zealand dollar. And this is going to be contract code 6N. Okay, guys, contract unit, 100,000 New Zealand dollars, product code 6N, price quotation US dollars and cents per New Zealand dollar increment. Minimum price fluctuation is 0.00005 per New Zealand dollar equals $5, guys. Also, well, that's not something you'll need to worry about. This clear part, you don't have access to that, neither do I. So, very similar to the Australian dollar, very similar to the Canadian dollar. Your New Zealand dollar is going to be $5 a tick. $5 a tick is what you should know on the New Zealand dollar futures. And you are notionally trading 100,000 New Zealand dollars. Okay, guys, let's have a look at the Swiss franc. That's product code 6S. Okay, guys. Product code 6S, contract unit, 125,000 Swiss francs. Price quotations, US dollars and cents per CHF, which is Swiss franc increment. Minimum price fluctuation, 0.405 Swiss franc increment is $6.25. So, guys, when you are trading this contract, every one contract is notionally 125,000 Swiss francs. And every minimum fluctuation means every time that this thing ticks up or down, it is $6.25 a contract. So, to provide you with an example, let's say, for example, we bought the Swiss franc here, and we closed it there. So that's 285 for every one contract times 625. That would be that move right there per contract would be $1,781.25. So that's 285 fluctuations times $6.25. Excuse me, that would be $356.25. So the basic, here, I will show you all what I'm talking about. So bring up our handy dandy calculator. And let's say we're here on the Swiss franc and we bought here and we sold here and it moved 0.00285. So what we're going to do is we're going to take 0.00285. So it moved 285. Going to divide that by 0.00005. Now we're going to multiply that by $6.25. So to give you an idea on an hourly chart, if it moved up, it'd be $356.25. So again, the contract size on the Swiss franc is similar to the British pound. Every time that it moves, it is $6.25 a tick. Okay, guys, now we are done with our Forex pairs. We're going to move on to the energies, which is now, this should still be a CME group. No, this is NYMEX. Let's see, CL is on here. Okay, guys, so we're now on the CL contract. CL closed at $83.44. Let's read the overview. Gain direct exposure to the crude oil market using CME Group West Texas Intermediate Light Sweet Crude Oil Futures, the world's most liquid oil contract. Let's look at our specifications here for CL. Contract unit, 1,000 barrels. So every time that you trade one of these, you're notionally trading 1,000 barrels of oil. Price quotations, US dollars and cents per barrel. Minimum price fluctuation is 0.01 is $10. So guys, every cent is $10. So for example, we're here on the CL. Let's say that we sold short the CL at $84.23 and we covered at $83.63. That is 63 cents. So guys, you'd make $630 per contract on that move. $630 per contract. So the CL, what you need to know is it is a $10 per tick contract. Okay. Now we're going to move down the list to natural gas, guys. So we're going to get our energies out of the way. Natural gas futures. Guys, this is going to be product code NG. Contract unit, 10,000 metric units. I forgot exactly what it's called, but it's metric units. Okay, guys, price quotations, US dollars and cents per metric unit. Minimum price fluctuation, CME Globex, is going to be intercommodity spreads. This should be $10 a tick. The minimum contract is 1/10 of 1 cent. So it's 0.001. So every time that this thing trades up or down, it's kind of like crude oil. It's going to be 10 cents per 10 cents per fluctuation. So to give you an example, let's say that we sold short natural gas futures at $2.38, and assuming that we didn't have commission or spread, let's say that we close that at $2.33. That would be 0.050. So what we're going to do is we're going to take our handy dandy calculator here. 0.050 divided by 0.001. So that's 50 times 10. That's a $500 move there. Excuse me. So we're 24 minutes into the video and we're getting through our energies. I'm sorry, I don't have a video editing software at the moment. Okay, so guys, with that being said, you should be familiar with the products that you are trading. You should know what the minimum tick size is. You should actually know what you're trading, what the product specifications are. So that's why I'm going through this video. It's not only for the viewing audience, it's for myself as well. So guys, natural gas is a $10 per tick. Okay guys, now that we've moved through the energies, let's get through the metals. So our next section is going to be gold, silver, and platinum. So let's start with GC, which is our gold contract. All right, guys, so contract unit is 100 troy ounces. That means that every time you're taking a long or a short, you're notionally trading 100 per contract, 100 troy ounces of gold. Price quotations is US dollars and cents per troy ounce. Product code is GC. Let's see, listed contracts. Minimum price fluctuation is 10 cents per troy ounce is $10. Okay, guys, so this thing moves in 10 cents increments. So, for example, you can see if I move up and down, it's in a 10-cent increment. So to give you an example, let's say that we bought a contract of gold futures here at 23.73 spot 7, so $2,373.70, and we sold 210 points or $21 higher at 2,394 spot 7. So let's do some basic math, guys. So 2,394 spot 7 minus 2,373 spot 7. That leaves us at $21 divided by 0.10. That's $210. Okay, so $210 for that move there. Sorry, that's not right. $21 there times 0.1. I'm sorry, it's $21. $21 times 10. It is $210 for that move there. So $21 higher. $2,100. Sorry. See how it says $221. It's 210 ticks times $10. It's $2,100. So I apologize for the delay there. It's $2,100 for that move there. One contract. So gold's a pretty big contract. It is $10 per 10 cents. So it moves 210 ticks or 210 10 cents. It's 210 times $10. It's $2,100 for that move there per contract. So a pretty big contract. Okay, guys, now silver futures. Silver futures are a very, very interesting product. Contract specs, contract unit, 5,000 troy ounces. Imagine that, you're trading 5,000 troy ounces of silver. On the SL, guys, price quotation is US dollars and cents per troy ounce. Minimum price fluctuation, guys, every tick is 0.005. That is 1/2 of 1 cent per troy ounce is $25. So silver is a big, big, big contract, very highly leveraged. And as you can see, guys, silver's a big contract. So it is, unlike gold, silver is not $10. So you see, natural gas is $10 per tick. Gold is $10 per tick. Silver is $25 per tick, which is a lot. Okay, guys, so let's say, for example, that we bought silver at $30, 30.915. That's $30.91.5. And let's say that we sold right where the market closed. That's 122 ticks. So you can see here, when you use the measuring tool, it is it's showing you 61 cents or 122 ticks. So that's 122 half-cent moves. So that move right there, if we pull up our handy-dandy calculator, 122 times 25, that's a $3,050 move. So as you can see, a very leveraged contract. Our next metal that we should talk about is going to be platinum. And this is going to be our last metal that we talk about. PL, symbol code PL. platinum futures contracts. Not something that people trade a lot. I understand that, so we'll get through this pretty quickly. 50 troy ounces of platinum. That's per unit. Price quotation is US dollars and cents per troy ounce of platinum. Minimum price fluctuation is 10 cents per troy ounce is $5. Okay, 10 cents per troy ounce is $5. Okay, guys, product code is going to be symbol PL. This is not something that a lot of people trade. Nevertheless, you should know what the tick size is. So gold's tick size was $10. Silver's tick size is $25. Platinum's tick size is $5. So let's say, for example, that we took a long here on platinum and sold it for 168 ticks. That's going to be a grand total of $840, guys. So basically what you should be getting from this is when you're trading, you have a lot of different products on the board. Silver is the biggest of the metals contracts, $25 a tick, very big contract. Gold is at $10 a tick. That's the same as crude oil and natural gas. That's what you need to know. And then platinum is $5 a tick, so a pretty small contract in comparison. Okay, guys, the next thing we're going to talk about are our agriculture, our ags. Okay, so we're going to start with live hogs, lean hog futures, guys, symbol HE. Okay, guys, so the contract unit is 40,000 pounds of lean hogs. Price quotation is US cents per pound. Minimum price fluctuation is 0.00025 per pound is $10. So every tick here is going to be 0.00025, and that's a $10 tick. So, for example, let's say we sold short lean hogs at 92.675. We covered that 101 ticks below. That is $1,010, guys. So, lean hog futures are obviously going to be affected by commodity markets. Let's look at just briefly our overview of lean hogs. Manage the risk inherent to the U.S. pork industry with lean hog futures and options. Engage in price discovery for individual markets and access arbitrage and spread opportunities with other commodities, all with the convenience of cash settlement. So that is on the CME's website for lean hogs, guys. It's a $10 per tick product. Guys, I forgot to mention copper. Let's go back to copper. Copper is something that you need to know about. So we've been on lean hogs. Let's go briefly back here to a metal and talk about copper futures. Symbol HG. Contract unit is 25,000 pounds of contract, so you are notionally trading 25,000 pounds of copper. Price quotation is US dollars and cents per pound of copper. Minimum price fluctuation is 0.000, that's 3 zeros and a 5, so that is 1/2. What is that? A thousandth? 1/2 of a thousandth of a cent? Per pound. It's a $12.50 contract. So for example, let's say that we longed copper here, not assuming that we have commissions and spread, which of course you do. Not including commissions and spread, let's say you bought at $4.56, 4.5615, and you closed at $4.65 even. So it went up 177 ticks in your favor. 177 times 12.50. That is going to be a $2,212.50 move. So guys, the other thing that you should know whenever you're using this, if you are still watching this video, which I hope you are, is if you're using something like the average true range, let's say we're here on the hour, and it says it moves 0.0217. All right, so 0.0217 is going to be divided by 0.0005 times 12.5. On average, it's moving per contract $542.50 per hour on average. So what you need to know is that it could move against you on average $542.50 or in your favor $542.50. That's what you need to know basically when you're using the average true range. So guys, copper futures are $12.50 a tick, and as you can see on the average true range, they tend to move about $500 to $600 when they're really moving per hour. Okay guys, we've been over lean hogs. Now let's go to some of our other commodities. Let's talk about soybeans. Going to move through these pretty quick, guys. I know that we want to get to the stock indices. Okay guys, 5,000 bushels is the contract unit. So whenever you're trading soybeans, you're notionally trading 5,000 bushels. The price quotation is US cents per bushel. So it's 1,131.40 cents per bushel. Minimum price fluctuation is 1/4 of 1 cent. That is 0.0025 per bushel is $12.50. So every time that soybeans fluctuate, it's $12.50. So using our measuring tool here from point A to point B, let's say it moved 50 ticks in your favor, which looks like that. It would move $625 minus fees and commissions per contract. Okay, and that is 12.4. So let's see if we bring this down to about 4. So we can see it moves about 18. 4.4 is 18. We go down to our average true range, and 4.2 means that on average it's moving about $225 per hour. Okay guys, let's look at the ZC, and that is corn futures. Okay guys, contract unit, 5,000 bushels of corn. Price quotation is US cents per bushel. Minimum price fluctuation is 1/4 of 1 cent. So that is $410 and 4/4 of 1 cent. Per bushel is another $12.50 move. So every time that it moves, it is $12.50. If we use our measuring tool here, if it were to move 6.2, I think that's what is that? 25 1/4 of 1 cent. So that is $6.02 of 1 cent. I believe that is the correct way to say that. But in any event, it's 25 ticks. 25 ticks times 12.50. That move right there was $312.50. If we look at our average true range, if our average true range is down here at 2.2, that would be somewhere about 9 times $12.50. $112.50 is the average true range. This is just to give you an idea of when you are trading, you're putting in stop losses, you're trying to do some math. Using the measuring tool on TradingView can be pretty useful. So as you can see here, it's 9 ticks times 12.50. So there you go. Okay guys, wheat. Let's get to the ZW. Contract unit, 5,000 bushels. US cents per bushel. Minimum price fluctuation is 1/4 of 1 cent per bushel is $12.50. Product code ZW, guys, and these are for wheat futures. So this is going to be the same thing as corn, the same thing as soybeans. Our agricultures are going to be on the balance $12.50 per tick. And how you quote that correctly is 1/4 of 1 cent per bushel. So $591 and 6 1/4 of 1 cent. Okay. Any other ags that I want to talk about? No. All right, guys. Now we're going to move on. We've talked about our Forex. We've talked about our metals. We've talked about our ags. Now it's time to get to everybody's favorite stuff, which are the stock indices. Okay, guys, let's start with our ES symbol ES. I can already tell you the contract specs here, but that's fine, guys. This is for the full size. So $50 times the contract unit is $50 times the S&P 500 index. Price quotation is US dollars and cents per index point. Trading hours, we all know the trading hours. Minimum price fluctuation, guys. 1 is a quarter of an index point, so 0.25 index points is $12.50. It is $50 a point or $12.50 per tick. So, for example, if the average true range here of the, well, let's go through an example. So let's say that I bought one ES at 55.91.25. I closed it, let's say 26.75 points higher. That's 107 ticks. So simply put, what I'm going to do with the calculator here is I'm going to do 107 times $12.50. It's $1,337.50 a move, and that's per contract. So guys, it's $12.50 a tick, $50 a point. It is trading the S&P 500 futures, and that's what you need to know about the ES contract, guys. $12.50 a point. And on average, again, if we go down to our average true range, let's say that we're trading during a time, you know, pretty regularly during the afternoon session where it's trading at about $10 to $12 or 10 to 12 points on average. Let's say that it's trading 10 points on average, which it is pretty often. On average, it's moving every hour $125 per contract. Again, that's per, 10 times 50, it's $500 moving on average per contract. Okay, guys, let's move on to the Russell 2000, symbol RTY. Talk about our contract specifications here. The Russell 2000 index, I think this is a pretty nice thing here. Russell 2000 index is a broad-based market capitalization weighted index that tracks 2,000 small-cap stocks covering a wide variety of sectors of the U.S. economy. The Russell 2000 index is generally considered a key benchmark for small-cap U.S. stocks. And let's get to the contract specifications. So this is symbol RTY. Contract unit is $50 times the Russell 2000 index. Price quotation is US dollars and cents per index point. Minimum price fluctuation is 10 cents and index points is $5, guys. So every time that this thing ticks, it is a $5 tick. It's $50 a point, $5 a tick. So what you need to know is that let's say that we shorted the Russell 2000 here, assuming we're making profitable trades. We shorted the Russell 2000 and we made 143 ticks or 14.3 points or 143 ticks. So all we're going to do is go to our calculator and 143 times 5, that would be $715 for that move there. Down here, this is measured in points, the average true range, so you just do 5.5 times 50. Okay, guys, so with that being said, now you're getting an idea for what these contracts are really like. What I will say is that the Russell 2000 generally tends to be a pretty big contract, but not as volatile as the NASDAQ. But it's $5. It's $5 per tick. Okay, guys, let's move on to everybody's favorite, the Dow, the YM. That's symbol YM. You're trading on your prop firm. And guys, if you're spending money on prop firm accounts, you need to know. These are just things that you need to have memorized. All of your tick fluctuation sizes, you need to get these memorized if you're going to be trading seriously. Okay, guys, the Dow Jones. So let me show you the Dow Jones here. The Dow Jones is $5 times Dow Jones Industrial Average Index. Price quotation is US dollars and cents per index point. Minimum price fluctuation is 1 index point is $5. Product code is YM. Okay, guys, so every time that this thing ticks up or down, it's $5. If you were to trade the micro Dow, it would be 50 cents. Okay, so the micro Dow or the MYM is 50 cents. The full-size contract or the mini is $5. So the Dow is really, really easy, guys, to kind of mathematically figure out. Just take everything times 5. So, for example, if we took a short here, we covered it here, 200 and just to give you an example, if we took a long here and we covered it 248 ticks, which you can see on the right, 248 times 5, that's $1,240, guys, so per contract. And you can see that our average true range is $63, 63 points. On average, it can get, on average, it's moving 75 points an hour. So let's say 75 times 5. On average, it will get up to move about $375, give or take, per hour. So that's what you need to know. If you're looking down here at the average true range, it's on average moving about $375 an hour when it gets up there. Okay, guys, so the Dow is really easy. Let's move on to the NASDAQ, everybody's favorite, the NQ. Talk about the contract specifications for the NASDAQ. Contract unit is $20 times the NASDAQ 100 index. Price quotation is US dollars and cents per index point. Minimum price fluctuation is 0.25 or 1/4 index points is $5. So what you need to know about the NASDAQ is that it's $5 a tick, $20 a point. Again, that's $5 a tick, the minimum price fluctuation, $20 a point. So just to do some brief math here, let's say that we took a long here on the NASDAQ at 20,219 and we covered it 782 ticks higher. So if we go do our math over here, it's $5 a tick. We made 782 ticks. So $5 a tick times 782, it's $3,910. If we go down to our average true range, guys, average true range is somewhere usually when we get up there to be about 60. So 60 points times 4 ticks. So 60 points times 4 ticks a point times $5. On average, the NASDAQ can start moving up to $1,200 per contract. So really, these are measured in points down here at the bottom. So on average, guys, the NASDAQ is moving a lot. That's what you need to know about the NASDAQ, is that it's moving a lot. It's $5 a tick, $20 a point. Okay, guys, I am going to wrap up this video here pretty quick with, let's first stop by the MBT, and these are going to be Bitcoin futures. Okay, guys. Contract unit is 0.1 Bitcoin as defined by the CME CF Bitcoin reference rate. That's the BRR. Price quotation is US dollars and cents. Minimum price fluctuation outright, $5 per Bitcoin. It's 50 cents per contract. So I personally don't trade this very much, but the basic idea is I want to see the... So contract unit is 0.1 Bitcoin. That's 1/10 of a Bitcoin. So every time that you're trading a futures contract, the micro futures contract, it's 1/10 of a Bitcoin. It's $5 per Bitcoin, 50 cents per contract. Okay, guys. The last thing I want to talk about are some of our... I want to talk about the Nikkei. symbol NKD. $5 USD times Nikkei stock average, that is the contract unit. Price quotation is US dollars and cents per index point. Minimum price fluctuation is 5 per index point equals $25. So what you need to know here is, if we come over here to the TradingView trade tab and hide this briefly, notice that it's 40,965. It's 5. Every increment is 5. So every tick, it's 5 USD. Every tick is $25. That's what you need to know. Every tick on the Nikkei here is $25 a tick. So, for example, let's say that we longed the Nikkei at 40,260 and we covered 67 ticks higher. 67 times 25. It's 1,675 per contract. So, what I'm showing you here is on the, see how it says 335 or 0.83%, comma 67? I'm looking at that 67. You take that 67 and it's $25 a tick, so it's $1,675. Guys, the Nikkei at that $25 a tick is basically like silver. It's a very thick, it's a very big contract is what you need to know. So on average, if it's moving 83, on average, 83 times 25, on average it's moving a lot. On average, it's moving $415 an hour, and that's our latest ATR. What you need to know, guys, is that the Nikkei moves a lot. Nikkei moves a lot, and it's $25 a tick. Okay, final contract that I want to look at that you should know about is going to be, so for example, just back here on the Nikkei, if it's 355 in change, it moved up 355 divided by 5. $71 times 25. It moved up 355 points, or and otherwise stated $1,775. So all you do is you take that 355, divide it by 5, multiply it by 25, and then you have how much it would move. So it's $25 a tick. Okay, final product that I want to look at are going to be the ZB. U.S. Treasury bond futures. Okay, guys, contract unit, face value at maturity of $100,000. Price quotation, points and fractions of points with par on the basis of 100 points. Minimum price fluctuation is 1/32 of 1 point. That is 0.03125. Equals $31.25. So every time this thing moves, it's moving $31.25. So if you don't want to learn how to quote this or do the math correctly, what you're going to do is just use the measuring tool. See how it says 22 ticks. 22 ticks times 31.25. The ZB futures, that is $687 and 50 cents. In other words, that move right there that I'm highlighting on the cursor, notice it says 0.22. That's 22 ticks or a $687.50 per contract move. Again, to quote the U.S. Treasury bond futures, it is 1/32 of 1 point. So 0.03125. And it's the price quotation is points and fractions of points with par on the basis of 100 points. So, you know, fairly difficult to understand, but that is there. Okay, the last product that I would look at are going to be the T-bond futures for that's the 2-year note. I want to get the 10-year. Okay, these are going to be the 10 years, the ZN. Okay, guys. Symbol ZN. These are the T-bond or the Treasury bond notes for the 10-year. Face value at maturity of 100,000. That's the contract unit. Price quotation is points and fractions of points with par on the basis of 100 points. Minimum price fluctuation is 1/2 of 1/32 of 1 point, or 0.015625, equals $15.62.5. So every time that this thing moves, it moves $15.62.5. What you need to know for that is, let's say, for example, that we took along here, we moved up 14 units. I'm not going to try and quote it correctly, but we moved up 14 units. 27 ticks. 27 times $15.625. That's a $421.87.5 move. So basically, guys, what you need to know is that the 10-year futures are half the size. They're half the size of the 30-year T-bond futures. And finally, guys, let's look at the 2-year note. And so this is going to be our last product that we look at, the ZT. Contract unit, face value at maturity of $200,000. So a little bit different. Price quotation, points and fractions of points with par on the basis of 100 points. Trading hours, we know the trading hours. Minimum price fluctuation is 1/8 of 1/32 of 1 point. That's 0.00390625 is $7.8125. So $7.8125. So to give you an example, when the 2-year note moved up 35 ticks, that moved up $273.43 cents. So what you should get from this is that the 30-year is the biggest contract, the 10-year is a smaller contract, and the 2-year is the smallest. Okay, guys, what you should know about trading the bonds is that the futures are inversely correlated. So if I were to head over here on the hourly chart, and let's bring this up here, hide the calculator. Okay, guys, what you need to know about whenever you're trading the bond futures is the bond futures are inversely correlated with the yield. So, for example, the value of a bond future is inversely correlated with the yield. So if I just go over to the 2-year T-note futures, notice that it's straight up, while the U.S. government bond 2-year yield is straight down. So whenever you're reading a headline about the bond yields, if yields are going down, the futures are going up. Okay? So let's say that I go to the ZB. So here I'm going to put in ZB. And here I'm going to put in US 30 on the bonds. Okay. All right, notice that as the yield goes down, the 30-year goes up. So the futures are inversely correlated with the yield. Okay, guys, we have reached the hour point on this video. In this video, I covered the contract specs for basically anything that you can trade on your prop firms. This is something, guys, that I know was a slog to get through, but you should know this. You should be able to converse about the products that you're trading, knowing the product sizes. Just to recap, guys, Australian dollar futures are $5 a tick. British pound futures are $6.25 a tick. Canadian dollar futures are $5 a tick. Let me bring this back over. Just want to review the Euro futures, 6E. Minimum price fluctuation. Euro futures are 625 a tick. 6J. $6.25. So Australian dollar, $5 a tick. Pound, the pound dollar, $6.25 a tick. Canadian dollar, $5 a tick. Euro dollar, Euro futures, $6.25 a tick. Yen futures, $6.25 a tick. New Zealand dollar futures, $5 a tick. Swiss franc futures, $6.25 a tick. Crude oil futures are $10 a tick. The ES futures, $12.50 a tick. Gold futures, $10 a tick. Lean hogs, I think $12.50. All of our ags were $12.50. Let's go back to copper, just so I know. Copper, HG, copper futures contract specs. $12.50 a tick. Bitcoin futures were 1/10 of a Bitcoin. I don't exactly know how to quote it. Natural gas futures, $10 a tick. Nikkei futures, $25 a tick. NASDAQ futures, $5 a tick. Platinum futures, $5 a tick. Russell 2000 is $12.50 a tick. So, Russell 2000 futures, we go to the specifications. Minimum price fluctuation is $5 a tick, $5 for 10 cents. Silver futures, guys, $25 a tick. That is something that you should know about silver futures. The Dow Jones futures, $5 a tick. 30-year bond futures are $31.25 a tick. That's on the ZB. $31.25 a tick. Corn futures, $12.50 a tick. The 10-year is $15. Let's see, ZN. Going back to the ZN. Minimum price fluctuation is $15.62.5 per tick. That's 15.625 a tick. Soybeans are $12.50 a tick. The 2-year notes are $7.81. So go to ZT. Minimum price fluctuation, $7.8125. That's 7.8125 per tick. And finally, wheat futures are $12.50 a tick. Guys, what is the point of this exercise, and why is it so important for you to know? if you are trading, you should be able to conversely and fluently speak about what you're trading, and you should know what your biggest and your smallest products are. You should know what your size, if you're going to be sizing properly, if you want to use something like the average true range, you need to know these contract specifications like the back of your hand. I think it's very important to get these things memorized so that you know. Guys, the biggest contract that you can trade on any of these futures prop firms or whatever, the biggest contract you can trade are the 30-year the 30-year T-bond futures. That's $31.25 a single tick. That's the biggest product that you can trade by far. Some of the other biggest products that you can trade are silver futures. Silver futures are $25 a single tick. Okay, $25 a tick, which is wild, but it is true. So, for example, if it says 18.5 cents, you multiply that by 2, it's 37 ticks on average. 37, 0.185 times 2, 37 times 25. That's not right. 37 times 25. On average, it's moving $925, which is just wild. So $925 on average when it's moving per hour, when it's moving per contract, when it's moving like that. So guys, you need to know what your contract sizes are. You need to know what these things actually mean in dollars and cents. I hope that this video helped you. Guys, this has been Our Trades, back with another video. Please make sure to like, comment, subscribe. And guys, if you want to ever reference this video, you can. If you want to see where I got this information, cmegroup.com. Okay, guys, thank you for watching the video. Please go forth, trade well, trade responsibly. Please trade responsibly.